I think from the overall parts of our like review of the nation, it was really hard to pick sort of 20 areas that we tried to do for this particular report,
Mm.
only because so much of the nation is in that undersupply. What we've recognized is the undersupply that was there in 2020, 21, 22, and 23 still has not been resolved. And based on some of the trends ahead, it doesn't look like it's going to be resolved anytime soon. So I might actually share my screen now. So you might see
Yeah,
something
please.
pop up here, Eric. And this is our report that we talked about from the Australia's Housing Supply Crunch.
Yep.
By the way, Eric, as you've seen as well, this is a totally free report accessible from our website.
Oh,
And
wonderful.
so that's investorkit.com.au for anyone who wants to download this for free. There's a lot of research papers there. Now, when it comes to this, I want to give a bit of a thank you to some of the team in the research space, Douglas and Jung, who've been amazing in putting this together and helping me put this together. But when it comes to measuring the supply, Eric, what we did is we had our spider chart, and this spider chart has about 6 core indicators. And so what we looked at to look at supply a little bit more detailed was future supply first. That was the construction.
Yeah.
Established supply, this is how many current listings there are. And we look at the listings in like 3 ways. One is total listing. 2 is percentage change in the short term. And 3 is percentage change, but against averages. So how much today and how's that changed against 3 years ago, against 5 years ago, against 7 years ago, against 10. Price pressure, this is just like, is the supply creating price movements? And those are things like, days on market, how quickly are things selling, auction clearance rates, vendor discounting, how much, people are having to give away from listing, and then sales volume. So these are some of the indicators that make up price pressure. Rental pressure, speed to find a tenant, rental days on market, and then rental vacancy rates, and then total rental listings. These are some of them. Housing availability. So a little bit different to established supply. Housing availability is not about listings. It's about listings as a proportion to how many properties are in the area. And so that's like a stock on market type percentage. And then we go to people movement. This is internal migration, overseas migration, whatever's important to that area and how that's going. So population growth. So this is how we're looking at the more supply angles, not just it's got some demand angles too, like these 2 metrics and that, but we're looking at this holistic supply. And this is how we selected 20 regions, and we scored them out of 5 with how stretched the curve is to the 5 on the end is how strong the data point is. So sometimes it can be confusing. You see future supply high, thinking it's a high score means high supply. It's actually the opposite. High score means very low supply of building and construction. So when we did this, we obviously see different shapes and sizes across the nation, but some of the standouts, like there's about sort of 9 in each page. So this first page here shows parts of Brisbane, Gold Coast, that's Robina. We've got parts of Adelaide in the inner market, in the north side, Prospect, Walkervale. Interestingly, we also got a few Sydney regions too. Penrith isn't as, even though it's further out, it's actually not that oversupplied at all. More parts of Brisbane here in these 2 markets, Adelaide again, and a few regional markets too. So we've got Toowoomba still very undersupplied, parts of far north Brisbane, and then Rockingham, which is in Perth. So with this, if the names are confusing, these are something called SA3 areas. I've used this term quite a lot. All it is, for simplicity's sake, is like if you grab maybe a few suburbs put together to make a meaningful data set, and you make that meaningful data set a bigger area, that's just what it is, a cluster of multiple suburbs coming together. So Robina doesn't just mean the suburb of Robina, it's like a big area around called Robina. And same with Marion. It's not the suburb of Marion, it's like all the way from like Warradale, like kind of part of Adelaide, down to Hallett Cove and Shadow Park is all part of Marion, like a 15-20 minute drive. So
Okay.
Toowoomba's all of Toowoomba, because that makes
Oh, gosh.
so that's one. And then if we go to some other parts, we've got some parts of Newcastle, some parts of Melbourne showing as well, inner Melbourne, premium Melbourne. We've obviously also got Barossa Valley and regional SA, and regional Queensland has a few parts too, but this is scored from top to bottom. So if it's 4+, it's already very strong. So it's good, it's undersupplied, but the strongest are naturally showing in inner Gold Coast, Brisbane, and inner Adelaide. These are some of the strongest showing from there, and some Perth parts here too. So that's kind of the strength, Eric, when we're seeing it. You can also see Hornsby, some parts of Sydney too. But we're seeing a lot of strength in this undersupply. And as you can see, the biggest consistency is the established supply. Some areas like parts of Adelaide and Bundaberg have like listings that are 40% below pre-COVID numbers. Like, it's crazy. So if you had, 1,000 listings for sale, it's kind of like 600 now, 500 now, even in some areas, 700 max. So I think right now that's the big issue there. It's not just the new build, it's mainly the for sale.
Why is that?
Yeah, there's a lot of causes. I think one of the biggest things here is that, oh, by the way, so I might quickly answer this one. With the above list, we try to get diversity. So we wanted strong above 4, but we wanted to
Mm,
pick areas from across the nation. If
mm,
we remove the diversity and just focus on start to bottom, just
yeah.
scoring, we obviously see Adelaide as the top, Adelaide, Gold Coast, Brisbane, more options in Sydney come up and more in Perth come up. So
Mm,
Fremantle, Sydney, and a few more in Perth. Yeah, it's quite Adelaide, Perth, Brisbane, Sydney dominated for some undersupply and a few regional areas too. But coming back to the reasons of the why, Eric, I've got a few reasons in our summary. So firstly, if I'll come down here, the potential causes.
yeah.
The first potential cause, in our opinion, is what we call extended hold periods. Naturally, Aussies right now are just holding properties for longer than they were in the past. And so we've got this average hold period, which, as you can see, has been trending up from a long time. And this increase has been, people 15 years ago used to hold the average sort of 6 to 7 years across many of these cities. And now this is trending up where you can see here people in Melbourne, look at that hold period, a very long period, looking at about like 10, 11, 12 years,
Mm,
holding properties for some time. Brisbane holding properties for some time. Canberra, all these numbers have lifted a lot. So the hold periods is one thing. Could be multiple reasons, personal financial plans, how much houses have grown. If it gives you that wealth effect, you want to feel like you've got that there. Elderlies who are choosing to age in their current home and instead of downsizing, people's belief in long-term investment in property after seeing so many booms and gains. There's so many things. And even one big issue there as well, you can see this, government. Government's cost of duties continues to increase when you index it against people's earnings and property prices. And you can see it's not getting any cheaper. Like, you can see the average property price movement here, average earnings, but the average duty indexed out against these things has been increasing. So, for example, in 2020, household income was about 3 times of what 30 years ago. Property prices were about 5 times of 30 years ago. But here's the
mm.
kicker: stamp duty is now 8 times more than 30 years ago. So Australia's not a good country for flipping property. It's just not. You look at other countries in the world, you can see transactions a bit more. We're not good for flipping. And so people tend to hold it for longer if you keep separation in this, which the government is naturally causing with stamp duty.
Yeah, the government is still a winner with regardless where the market is.
Yeah. uh, so I think like that's one core part there, which
Mm,
continues. And this is just the extension of that stamp duty piece, how it keeps rising. Another thing is on the rental side, obviously we saw the supply is rental part 2, not just for sale.
mm,
And the suppressed investor activity is definitely affecting supply levels in the rental, but also for sales. So investors do increase housing supply in rental markets. We can see that when we saw the Sydney boom and Melbourne boom, investor finance represented 1 in 2 deals during that time. And what happened was builders loved that, developers loved that. And the biggest unit oversupply and dwelling approvals occurred during 2015, 16, 17, those 2 cities. And it was full of high vacancy rates for the years to follow in Sydney at 2-3%, 3+ in some areas. All of a sudden, that gave the power to some tenants and it allowed for a lot of rental market availability. So you can just see as well with investor activities that has been suppressing as well. We've seen in the development percentages start to slow. We've seen obviously the investor share as well start to slow. There was some uptick recently,
mm.
but overall the Australian investor has been declining in their percentages of deal making, right? And that happens as well when the government put all that sort of impact and legislation on that doesn't help. You can look at it multiple ways. You can look at APRA's investment loans and their limits. You saw that and you're very aware of that, Eric. The interest-only loans, ending and not being so easy to get. Land tax starting to, have more and more impact. Victoria's COVID debt levies and more higher interest rates with the banks. Less LVR with investors than owner-occupiers. You can see Combank starting to change their tune. Matt Common recently was on the news talking about how we're going to focus on more investors. We're going to unlock more, higher LVR loans for investors, and investors are going to be coming back. Whatever they want to do, it actually, funnily enough, does start with the banks.
Yeah, only if we believe it.
Yeah, we'll have to wait and see. Obviously, this is a big part, right? Because Australia really separated itself in terms of from like the greater parts of Europe. In the social housing, you can see how we've declined in social housing as a country, going from the 80s and 60s. We used to have a lot of increase in developments of social housing, and that has been trending down and down and down and down. So it's a catch. Like on one side, the government's not stepping up on social housing. On another side, they want to charge people more for transacting on property when you compare it against wage growth, property price growth. And on the last side, they don't want to help the investor who then they rely on for publicly, having that private development of property or the private, bringing of supply. Because they're not stepping up publicly, they're charging you more to transact, and they're staying privately. We want to ping you and make more money from you too. So it's just, what are we prioritizing? Like short-term leadership with short-term money making. You can clearly see that long-term strategic leadership is lost over here. Long-term strategic leadership is lost. It was about to have the challenge of stamp duty, but obviously Dominic Perrottet, I think it was, obviously that changed along and that happened. And then also we saw now lack of investor activity. So these are some of the things. Now, other things as well, Australia's lack of land supply. Whilst Australia is very huge, our population is extremely concentrated. Look, I'll go into more of that later, but the main thing here is that our land supply, our rezoning processes, our time to develop, and as well as our concentration of population, it's some of the worst in the world. Like very few places in the world have that much population concentrated in just a few cities. Obviously, there's some natural things that make it difficult, but we still have a lot of connectivity that could improve. If you look at the Northern Hemisphere, how much activity goes on, whether you go to parts of China or parts of Japan, a few other areas where you just see how well like smaller cities are exploding into bigger cities, and the connectivity in transport, trains, all these different things, they do ease crisis when you have more spread of population. The planning side was another thing. Construction costs and labor shortages. We can just see the labor cost index increase, housing construction costs increase, and the uncertainty around construction. We've seen that a lot. Even just today, I heard from someone about how they put a deposit on a block of land in Canberra last year for like 800. Now the prices have dropped to 600 and something in that estate. And
you mean land value?
Yeah, even land
Wow.
value in their state. Like everyone, when you go into these new build areas, some do really well, but you can have issues where you just don't know what you don't know. The developers also facing some cost issues and trying to get their projects up as well, the construction issues. So obviously we're seeing construction costs ease now. We're seeing steel and timber costs come down. But right now you can see these are two decent issues.
Has it eased much or just very
It's eased some decent percentages. Obviously,
Okay.
how much materials ease versus how much the developer wants to charge you is still two different things, right?
it is.
Profit's their profit at the end of the day. Like, but at the actual back end, that's easing, which
Okay.
should improve in terms of the inflationary parts, but also it should improve like the risks that were there of people flopping and falling over because of certain costs. They are improving now. So that is one good thing. And on the other side, Eric, it's not just about supply being low because supply is low. Supply can also be low because demand is too heavy. And so we can see the recovery of overseas migration is unreal. We are now crossing or about to cross the 2008 migration surge. Yes, I understand it's playing catch up for the year prior, but it's now well and truly gonna, eclipse that. So overseas migration is huge. The other downside here is the generational shifts. We're seeing Australian household sizes decline. Australian household sizes decline may not seem like a big thing, but even these subtle changes from census to census and seeing the household size fall, you can create tens of thousands of new households with the same exact population. So imagine a 4-person household suddenly comes down to 2. Now, I know it's not that dramatic here in this example, but it's trending down. When that happens, like that's a sign of no new people, but we need more houses to fit the same people. It's just like the roads when more people have more cars. Same thing.
So you
You know
mean
what I
you mean
mean?
the same kind of or growing population, but the size of the family getting smaller. So it means the individual dwellings requirement, well, demand is growing.
Absolutely. So if you now have an average household of 2.6 coming down to 2.5, as you can see, it was the lowest it ever reached in history in recent times.
Mm,
This is usually like caused by one of two things, either generational changes, or it can be what we call cost changes. So I
mm,
believe the uptick going backwards is the cost changes. And I'll explain that in a bit. But the going downwards trend is generational. So the millennials are starting to form families. And
mm.
so, um, not everyone is like, Arjun, the Indian family who will, have my kids potentially with the same roof as dad and granddad and grandparents and great parents, all that stuff. And even that is now questionable in our culture. Even we're seeing the cultural norms change, you know what I mean? Like, but I feel like a lot of people who are obviously setting up families want to have their backyard for their self or go out and set up their own family, not live in the same house with mom and dad. And that's the big shift. That's the millennials, right? Huge shift. The second thing is the uptick. This uptick is typically caused when people come back together because of cost pressures. So migrants might be coming in, having rooming together, or locals might be deciding to flat together, or people might be coming to say, well, maybe let's stick together or have more babies. There could be a few different things here, but the main thing is we're seeing this uptick, and I believe that has to do with also some cost pressures where people
Yeah.
reduce their costs through sharing.
Yeah. But this has another thing. This will be temporary. If people do have a choice, they definitely will find their own accommodation rather than
Absolutely.
with families.
Absolutely. I talked earlier about the concentration of population.
Mm,
So this was interesting. 61.4% of Australia's population is concentrated on the 5 capital cities. 85% live in 50 kilometers of the coastline. So obviously we're very popular for our coastlines, and obviously the water systems and the actual infrastructure is set up in that way too. But we really don't have any game-changing internal infrastructure to connect cities. Only now we're starting to see some motorways. Like for now, I'm realizing now people in the Central Coast don't really consider themselves as living in Central Coast. They still start to say Sydney now because you can get on the highways and you can come down pretty quickly. My dad goes on that highway every single day for
oh,
work. So I think more and more of these things that happen, we will start to obviously see some improvements in the rental space. But for now, lots of room to improve. It's
yeah,
pretty shocking to see that.
yeah, kind of urban sprawl, isn't it?
Yeah, and I guess obviously overseas migration, people forget there's also internal migration. So
Mm,
internal migration and building approval trends, they're just not keeping up with each other. People are moving and leaving one area, going to the other area. And the regional migration trend, yes, it has come off its peak. That
mm,
is normal, right? To come off a peak, because that peak was during that COVID time where
mm,
people really wanted it all. Now, yes, it's come off its peak, but it's still at well above trend levels. It's very
mm,
strong. You've got the
mm,
previous trend pre-COVID hanging around 10 to 15K. You're still operating at double those amounts.
mm.
So I would say that that also causes some of the supply shifts.
Does this include the interstate migration as well?
Yeah, so this is more regional migration that covers
Oh,
both.
okay. Yeah.
Yeah.
Okay.
And so effectively, Eric, I hope this shows that it's not just one thing. It's a combination of migration internally overseas,
Yeah.
population concentration, shift in household size, also going to the supply issues of construction costs and labor costs, moving back up into planning and limited land supply and release of that supply with the red tape being cut, our government stepping up on social housing, our investors getting a fairer chance to play at the game of life, and then also having the stamp duty government costs and hold tenures increase over time. So these are the,
Mm.
in our opinion, essentially the big causes of this undersupply.
Yeah, it's cooking a perfect storm, isn't it? Storm.
Yeah, and that does not get solved overnight. This will take time.
Yeah.
That's some of the big parts.
Oh, okay. Sure. Yeah, this is probably the accumulation for many, many, many years.
Yeah, I think like when I think of it, there was obviously a big change post COVID. We can't
Mm,
ignore the trends. Like if you just go to pre-COVID trends, suddenly everything's different. But COVID was an acceleration of trends that were on track to continue.
mm,
So migration was going to keep going up. Investor proportion of rents was going to, keep going down in terms of the
mm,
investor activity. Building supply was trending down already. All these things that were happening were already happening. It
mm,
was just like a pedal to the metal happened, and then supply
mm,
shocks happened. All this money being fast tracked, job creation fast tracked, all these supply concerns, people holding on to what they have fast tracked. So everything was just happening, but we were always going to face this undersupply, even if COVID didn't happen. And I believe that household formation, household sizes, these sorts of things were a big part of that.
yeah, I think it's probably COVID made more visible or exacerbated. Yeah.
Absolutely played a
Mm.
key part.
Yeah. Look, Andy, you list all the challenges right out there because of what's going on with the undersupply. Do you see anything we can or government can do or they can do to address it or to solve it or anything they can do to improve it?
Yeah, I think there's been a couple of short-term things starting to come up.
Mm,
Like you can see them removing the red tape on granny flats across the country. Now, I'm not here to advocate to say granny flats are the best investment or anything, but the thing is they're unlocking rental
mm,
potential. So that's one thing.
mm,
I think immediate things they can do is really have more leeway and collaboration from local
mm,
governments to state governments to federal to banking bodies and come together to not disincentivize investors. And then obviously they can start to set long-term plans for social housing.
mm,
And then from there, we can look at reducing the actual construction costs, because a lot of the construction costs are also made up in tax.
mm,
And so then from there, we also start to look at other things where we start to look at with regards to how we, charge stamp duty. Do we play around with that? So I think if we remove barriers to transact frequently, people won't hold as long. If we remove taxes that constrict supply and the red tape around supply, more of it should come. If we
mm,
focus on large city changing infrastructure to build connectivity and spread our population, people will look at those more options in the cities that can start to have more options easily built.
mm,
Because also land is cheaper in those areas for people to go and develop too. And then if we move through long-term social housing plans, if we move through incentivizing investors to act more, and then we start to work with those bodies across government and banks, suddenly a big change happens. So I do feel like the answers are all here, some short term, some longer term. Majority of them, as you can see, are more on the longer term side.
mm.
But if not now, when? When do you start? Do you know what I mean?
Oh,
And whilst an investor I know it benefits me, Eric, to be an investor
mm,
and see undersupply and see
mm,
growth occur in my assets. The truth is, even without this undersupply, Australian housing growth was always a well-placed engine
mm,
at 5 to 7% long-term averages. So we don't need, as an investor, people to hurt and people to be impacted by certain prices or rents to achieve our wealth growth. Remember, with 40% more supply in 2018 and 19, we still had decent areas growing okay. Obviously, not the 20, 30, 40% booms. I never made my spreadsheets for my own portfolio saying every year I'm going to get 20% booms. I made it based on a 5%. So we don't need these times necessarily to be okay with wealth generation. We can find a better balance as a country to still build wealth for the future as investors and still house more people and rent more people. I just think it's too constricted on one side.
yeah, I would agree. Also, if you look at it, the well, not a government, it's someone play the game of investors versus buyers. It's not. When you look at investors, how many investors are holding the investment property? Not very, very small, right? But the main problem is the majority of it. That's where the issue is. But or regardless of what it says, maybe government and maybe some media they play the game with all investors against the buyers, which is very
Yeah.
very misconcepted. I think. And also, like you said, when the investor, I don't think the investor take advantage of them or pendant or buyers to achieve wealth. It's not. It's regardless whether we buy it or someone else, but the same thing. They still have same kind of growth.
Yeah.
Yeah, it's lots of un, not well informed. Um, okay. So like we talk about investors, right? So from investor point of view, what do you think this kind of factors like the short supply and the government change will impact the market?
Yeah, I think the short supply here is showing right in front of us. Prices are still increasing,
Mm,
and interest rates alone could not stop that. What
mm,
interest rates did is they hurt confidence last year.
mm,
People paused, people were worried, people were uncertain because of three reasons. It went up for the first time in 12 years.
mm,
They didn't know how much up it's going to go, and they didn't think it happened so soon. That's it. So
mm,
those three reasons change confidence more than anything.
mm,
Now, of course, they also change actual borrowing power, and they
mm,
also change actual repayments. I'm not saying those aren't impacting people, but those are just making changes that, whilst we are uncomfortable with or don't like, most, if not all people in the country, almost all,
mm,
stress tested
mm,
on these numbers. And some people go past that stress test and they're actually impacted, distress sales and things are occurring, and that's sad to see. But overall, of Australia's actual impact is quite low. And this
mm,
is why we're still seeing prices rise substantially.
mm,
And they will continue to do so because of undersupply, because of
mm,
the economy. The economy right now is showing some signs of weakening in certain spending data, in certain business confidence. But the two metrics that is measuring on the economy, which is the unemployment rates and the job advertisements,
mm,
they still remain very strong. And so it will have a flow on impact. I expect unemployment to increase soon. It's just very stubborn right now, and that's a good and bad thing. The good thing is obviously everyone's, well, not everyone, a lot of people are doing okay. But then the downside of it is that these trends make the RBA more comfortable with increasing if they need
mm,
to. So I would say right now, for as long as the unemployment and job trends stay healthy
mm,
and this undersupply continues, price growth just has to keep happening. And whether
mm,
people like it or not, people with jobs confident to make decisions combined
mm,
with not much choice equals price growth.
mm.
So yeah.
Yeah, that's right. Oh, look, as long as short supply stay there, the demand does not diminish. There's more people competing for the limited stock. Right, one person cannot buy, the other person has resource might buy. So then there will be some competition as well, so it pushes price up. So that's why we see some of the astonishing prices achieved on
Yeah,
the
I mean,
market.
I'm seeing in my backyard here in
Mm.
Glenwood, Sydney, like I think in Bella Vista as well, like the record just got broken. Like a $5.6 million sale happened yesterday or day before
Wow. Well,
in Bella
5 point.
Vista.
Wow.
Yeah,
Geez, Vista.
5.6. And then in terms of Glenwood, like the single level home sold for
Mm.
2.1 million. And that's never happened before. A single level home, family home on over 2 million.
Mm.
So I just think that, and none of these auctions are just one lucky person coming out there and bidding. These are jam-packed auctions,
Mm.
intense bidding. So this is that confidence returning with a strong active job market, pay rises coming back into the data as well, combined with, people having undersupply and lack of choice.
Mm.
It's a natural phenomena. And I think we need to let the market see its time and do its thing. And
Mm.
after this boom truly finishes, then from there you'll see things start to come back up. People want to cash out.
Mm.
People with the lack of confidence in jobs, once the unemployment rate starts to increase, they'll start to think of their options, and supply should start to come back to the market.
Mm. Yeah, it's just an interesting market, and you pretty much see the street or suburb record every few weeks. It's just like,
Pretty intense.
yeah, that's great. Look, Arjun, that's pretty much what I want to ask you. Thank you for the insight. It's really insightful and very useful. Um, look, if we wanted to download the report, do you have a link I can use or I can share?
Yeah, absolutely. So I'll give you
Okay.
the link, and I'll also give everyone a shout out here as well. It's investorkit.com.au. And if you click on the research tab, there's a section called white papers. And the white paper name is Australia's Housing Supply Crunch FY23/24. We do this report this time of the year every year. And also, there are about 16 or 17 other white papers there as well, all for free.
Okay, wonderful. Thanks, Arjun. Really appreciate it.
Thank you so much,
Well,
mate. Take care.
next